Goods and Services Tax, one country, one tax, popularly known as GST in India. Goods and Services Tax is a destination-based tax on consumption of goods and services. It is levied at all stages, right from the manufacturing stage to the final stage of consumption, with credit of taxes paid at previous stages available as set-off. Set-off availability means the GST paid on purchase transactions can be adjusted against the GST collected on sale transactions. Let's learn with examples in a couple of minutes. Goods and services tax has dual aspects concept. The central and state governments simultaneously levy tax on a common tax base. There are three main components of GST, which are SGST, CGST, and IGST. SGST, State Goods and Services Tax levied by state governments. CGST, Central Goods and Services Tax levied by central government. IGST, Integrated Goods and Services Tax levied by central government. Taxes collected under SGST are revenues of state governments. Taxes collected under CGST and IGST are revenues of the central government. GST Act considers movements of goods and services to apply the appropriate tax framework. GST Act classifies these movements as intrastate and interstate movements of goods and services. Intrastate movement. Transaction takes place in one state only means transaction between a seller and a buyer of the same state X. Interstate movement. Transaction takes place between two states means transaction between a seller of X state and a buyer of Y state. Intrastate movement. Under this, SGST and CGST both are simultaneously imposed with 50% share of each government, state and central. Interstate movement. Under this, GST is known as IGST and 100% GST is going to be imposed by central government. Scenario 1. Let's try to understand the GST concepts with below examples one by one. Intra-state transaction. X is a dealer in ABC state, sells goods to Y in ABC state worth 10,000 rupees. The applicable GST rate is 18%. This transaction is an intra-state transaction, means transaction takes place within the same state ABC. The both seller and buyer are from ABC state. SGST. Now, 50% of the GST, 18%, that is 9%, 10,000 times 9% equal to 900 goes to the state government. CGST, 50% of GST, 18%, that is 9%, 10,000 times 9% is equal to 900 goes to central government. Scenario 2. Interstate transaction. X of ABC state sells goods to Y of MNR state worth 10,000 rupees. The applicable GST rate is 18%. This transaction is an interstate transaction, means transaction takes place between two different states, a seller of ABC state and a buyer of MNR state. Here IGST comes into picture, that is 100% GST, 18%, that is equal to 18%. So 10,000 times 18% equal to 1800 goes to central government. Scenario 3. X is a registered dealer, had input tax credits of SGST 1050 rupees and CGST 750 rupees respectively. This X sold 1800 units at the rate of 10 per unit. So these are the sale transactions. Within state 800 units, consignment sale 350 units, and interstate sale 650 units, total 1800. So GST rate is 12%, that means CGST and SGST 6% each government share. So now calculate tax liability of SGST, CGST and IGST to be paid after tax credit. These are the tax credits on purchase of inputs and capital goods. Let's see how to calculate. Here in this table, particulars, sales within state, consignment sale and interstate sale. So 800 units quantity sold, 350 units here and 650 units interstate. Total 1800. Now value of goods sold. 10 times 800 equal to 8000. 10 times 350 equal to 3500. 10 times 650 is equal to 6500. Total value 18,000. That is 1800 times 10. So now how to calculate tax? Here, CGST and SGST both are simultaneously applied on this transaction. This is intra-state transaction. So 6% of 8,000 equal to 480, 6% of 8,000 equal to 480. So here the total tax SGST and CGST like 480 plus 480. Now let us go for consignment sale and interstate sale. This consignment and interstate sales both are same because this is going to be an outside state. That means the two states are involved here and here also two states are involved. See, 12% of 3,500 equal to 420, 12% of on 6,500 equal to 780. So here this tax 420 plus 780 together 1,200. Now we have three figures: SGST payable tax 480, CGST payable tax 480, IGST payable tax is 1,200. Total tax payable is 2,160. Now let us see how to claim these two taxes like input credits. So 480, 480, 1200 transposed to 480, 480, 1200 here as GST, CGST and IGST. Total is 2160. Now we need to claim SGST. So SGST amount is 1050. So claimed against SGST 1050, but here is the difference, tax difference 2160 minus 1050 is equal to 1110. Here we have to adjust this one. So first this is SGST amount. So what is SGST amount? 480 is payable, but 1050 tax credit is available. Which one is higher? 1050 is higher. So we can claim this full amount of 480. So 480 is claimed fully. Still there is a balance of 570. Where can we claim this 570? That can be claimed against IGST here. So the full amount 1050 is claimed against first SGST and then IGST. This is forward claim because this tax credit under SGST is available. So first claim on SGST and the balance is on IGST. Now CGST 750. Here also we can claim like forward claim. First on CGST and then IGST. We will see 750 claimed, but this 750 first under IGST. So 480 is less than 750. So full amount can be claimed. 480 minus 480. Now CGST tax payable nil. Still there is a balance of 270 that can be claimed against IGST 270. See, first same category and then balance on IGST. This one is forward input tax credit claiming or forward claim of input tax credits. So first this is SGST balance. So first claim on SGST tax payable amount and then balance IGST. This is CGST claim. So first claimed against CGST payment and the balance is IGST. Now 1200 minus 570 minus 270 equal to 360. 2160 minus 1050 minus 750. Balance is 360. So final amount payable is 360 after claiming input tax credits. I hope everything is clear as of now. Let's go to scenario 4. All calculations are same regarding these taxes, but the input tax credit is different here, that is IGST 2000. In this case, how to claim? There are no CGST and SGST claims, only IGST. Okay? So IGST claim first. That means we need to claim here 2160 minus 2160. Where to adjust these a 2000 amount against these taxes. This is IGST amount. So first claim should be an IGST. So 1200, 1200. Now this payable tax is gone. Now still there is a balance of 800, 2000 minus 1200. So this 800 against where we can claim CGST, that is 480. So full amount can be claimed. So claimed full amount. Still there is a balance, right? 2000 minus 1200 minus 480. Still there is 320. Now this 320 can be claimed against SGST. So the net payable tax is 160 after claiming IGST 2000. This is backward claiming process. So the simple logic, available tax credit must be claimed against liability of the same tax credit. If SGST tax credit is available, it should be claimed first as GST. IGST tax claim is available and then first IGST, then CGST, then SGST. This way, this is backward claiming. In these two cases, it is forward claiming. That's it. So I hope everything clear. Questions and doubts welcomed by USSEMA Factory, USSEMA Factory at gmail.com. Thank you.